Hey everyone, welcome back. Today we're taking a look at Lucid. Almost a week now, the Lucid SUV has been launched. That is the Lucid Gravity SUV. The stock price has actually fallen since then, and it's actually been quite a bit of a shock to certain people. So on Thursday last week, Lucid unveiled its new Gravity electric SUV. The new EV will start just under 80,000 US dollars with a driving range over 440 miles. Now, this is incredible for a few notable reasons. This EV, the Lucid Gravity range, outclasses every EV that was built by Tesla. So naturally, this is a huge moment for Lucid. And for some people to think that the share price would actually do well after this incredible news has been announced, they were actually wrong. The share price has not done well recently. Now, the company is benefiting from some new PR that portrays its new Lucid Gravity SUV in a positive light relative to the Tesla Model S and X and the Cybertruck offerings that are up to come. And to be honest, you don't really need much to portray the Lucid Gravity as a better option for a lot of people compared to the Tesla. For one, the Lucid has a lot more space. That's for one. Interior wise, it has a lot more room. I believe it's a bit more functional. While the Tesla Model X, it's really flashy. It's got those Falcon doors, which are really cool. No criticism here. But in terms of mileage is where Lucid wins, and it looks like they don't intend on slowing down. They do really good in this area, and as you can see, they're offering premium EVs. But recently, the share price have taken a tumble, and it's cause for us to look into it. Now, I spoke about the Lucid Gravity because naturally I was quite excited. I've been excited for quite some time about this vehicle. And at the start of November, the price was just around $4.62 for the Lucid stock. At around the 9th of November, it did fall down less than $4 to $3.76. And that was leading up to the launch of the Lucid Gravity. So that wasn't a good start, to say the least. Now, it did start to recover slowly, for sure, just around the 13th, the 14th of November, leading up to the 17th and the 20th. But after the 20th, it took a tumble once again to $4.20. Now, to be honest, it's not a huge difference compared to what Lucid was doing before. For October, the end of October, they weren't around this price. For the end of October, they're around the same price, around $4.17, $4.12. Right now, it's $4.20. So it's not a huge difference. But what is a huge difference is the fact that the stock has not exploded. For an EV such as this, the stock price should have exploded. If Tesla were the ones who released the Lucid Gravity, if that was a Tesla car, the market would absolutely go nuts. The mileage, the space, the utility of that vehicle, it would be a big win for Tesla. But unfortunately for low cap companies like Lucid Groups, companies like Lucid that are less trusted, companies like Lucid that are known for being really expensive, it doesn't garner as much attention. And it certainly doesn't get the appreciation that it deserves, especially for a vehicle that can travel approximately up to 440 miles. That's incredible on a single charge. The electric cars and trucks remains popular range among certain EV buyers. Now, despite the reports, they are not selling quite as well as hoped. One obstacle to greater adoption is that many car buyers still worry about running out of gas or precisely electricity. Because of these vehicles' limitation range and inability to fill up quickly at a gas station, Lucid latest answer to this concern is that the Lucid Gravity, a new luxurious three-row SUV, that it will start below $80,000, and it promises a driving range in excess of 440 miles compared to the Tesla flagship Model S sedan and the Tesla with the company's greatest driving range of 405 miles. That's at least 5% advantage for Lucid. But then again, Lucid already has an advantage over Tesla sedans with its Air Dream Edition R, boasting a reported driving range of 520 miles. This is one area that Lucid excels in really well. Its mileage and speed, performance, torque. They excel really well in this area, and I'm curious to see where they'll go in the future with this tech. Unfortunately, right now in the market, especially with electric cars, it's all about being a technological company. You're now a tech company if you make EV vehicles. Because tech is such a big part of making EV vehicles. That's what customers seem to want. They want that ecosystem. Customers are waiting for the EV version of Apple, and that seems to be Tesla for now. It really does seem to be Tesla, and Tesla is not slowing down in any shape or form. But if you're comparing the Gravity, the Lucid Gravity, to the Tesla Model X SUV, the Tesla Model X has over 448 miles of range. So the Lucid Gravity has a 26% advantage on the Tesla Model X SUV. They're both SUVs. They're both basically 3 rows. However, I must admit, the Gravity is far more luxurious and roomy, especially for passengers. I can imagine passengers enjoying the Gravity a lot more. And just to make it even more interesting, the Lucid Gravity boasts a massive 65% advantage over the Cybertruck reported 267 miles of range. If that's true, that would be absolutely astronomical. Why does the Cybertruck have so few mileage? Ideally, that's a vehicle that should have more mileage, if I'm being completely honest. It's a utility vehicle, it's an off-road vehicle, it's a pickup truck. It's supposed to have a lot of miles. Now we get to the interesting part, more about the stock itself. And by the way, this is not financial advice, it's just for educational purposes. But these all sound great for a car buyer to buy the Lucid instead of the Tesla, of course. Lucid problem is that there doesn't seem to be enough people interested in the vehicles. No matter how good the Lucid vehicles are, there's not enough people interested in buying the Lucid vehicles. They'd rather go to Tesla. And I get it, because your friends are getting Teslas, because that's the market trend. Tesla is the most reliable right now. They're also the most promising. You know what you'll get when you buy a Tesla, and you can buy a Tesla for like 40 grand. Teslas are far more affordable than a Lucid. Tesla has way more options as well, not just with the different types of vehicles they offer, but we know that the software is rather good. The updates are rather good. Those cars, they drive themselves. Sentry mode. There's so much benefits to having a Tesla. It's such a sophisticated car, such an intelligent car, such an intelligent company. There's a lot of benefits. Tesla is the obvious option for someone getting an EV around 40 grand, 50 grand, 60 grand. Lucid is for people who they want something a bit more luxurious, faster, longer range. Polestar is for someone who wants a little bit in between. So it's really interesting where these EV companies, they fit in. Now, car buyers are still choosing Tesla, of course, rather than Lucid. And Lucid earlier this month cut its production for 2023 from 10,000 units to somewhere between 8,000 and 8,500 units. And this is to prudently align with deliveries. Long story short, while driving range is still important, it isn't the most important thing for the Lucid stock, or even more important for EV buyers. Who would have thought? Driving range is not the most important thing for EV buyers. I hear what you're saying. These vehicles are still insanely expensive. And of course it is. 80 grand is nothing to joke about. Spending 80 grand on a car, very few people can do that. The majority of the market wants to spend half that on a Tesla Model 3. And another large part of the market wants to spend 30 grand on a new EV, or 25 grand. That's why Tesla is working on cheaper cars. And this is why it's going to be such a challenge for Lucid to compete with Tesla, and for Lucid to compete with other companies as well who will offer cheaper cars. I'll reiterate this, and this is just my thought on Lucid. I'll always say, I believe Lucid should be owned by another company that can support Lucid properly, financially. Now, currently, they're being invested by the Saudi investment trust, and while that's a good thing, they're opening up in factories in Saudi Arabia. That is a good thing. But I think they need more guidance, better guidance, more guarantees. And to be honest, the Saudi money is quite a lot. They won't run out anytime soon. In terms of funding, Lucid should not run short of funding, if I'm being completely honest. But even more interesting, Lucid is losing 2.6 billion a year, burning through 3.6 billion in cash a year, and only has 2 billion net of debt left on its balance sheet. So how long until Lucid is going out there looking for additional funding? It won't be too long. Similar to what Polestar is doing right now, they're looking for additional funding internationally and within the Geely and Volvo brand. And you will see Lucid do something quite similar. The simple fact is, the EV market is such a challenging business to operate in. For anyone involved in the EV market with EV companies is such an incredible, difficult thing to be a part of. But nevertheless, let me know what your thoughts are on Lucid at the moment. Keep in mind, you want to look at the IPO price. Wow. Back when this company IPO'd, it rised as high as $12.87. Absolutely incredible. And in terms of revenue, Lucid is kind of plateaued, if I'm being completely honest. Looking at revenue on Cultrum, Lucid is really plateaued. At the end of last year, it looks like their revenue was just above, I'd say 250 million, and I think that was the last quarter 3. And I believe that was the last quarter. That was quarter 4. Q4 last year was 250 million in revenue. That's not profit, by the way. But since the entirety of this year, it's plateaued a lot to around 150 to 140. So it's really interesting where the company is going. Even more interesting is the debt and the cash on hand. Cash on hand, as for, I believe this is Q4. It's very interesting, actually. Approximately 4.4 billion. This is approximately, could be less. As we were saying before, it's like around 2 billion. So from Q3 to Q4, that might have changed by a lot. The debt has been staying around that area for quite some time, especially for the last couple of years. So it will be interesting to see how they react to that. Are they planning on taking out more debt? Are they planning on getting more funding from the Saudi Investment Trust? Are they planning on getting more investment from global entrepreneurs? It's all up in the air, but you can see in terms of expensive, CapEx is one of their main expensive, of course. And I believe that's capital expenditure. And as for R&D, that's also the second biggest part of their company. Looks like they're spending a lot of money on R&D, which is really interesting if I'm being completely honest, because I was looking at Polestar data the other day, and Polestar doesn't spend a lot of money on R&D, which is really interesting because Polestar is developing so many different vehicles. But nevertheless, I'm glad to understand this a little bit more about Lucid. Hope you enjoyed this video. Thank you for watching, and I'll see you in the next one. Peace.